Hi, Dwayne Duggan, Remax Boulder Podcast. Today we have Jessica Shanahan. She's with Premier Lending. Jessica's here to tell us about a new loan program they have. So Jessica, thank you for being here.
Yeah, thanks for having me.
Really appreciate it. So it seems like over the years, loan officers call me from time to time and want them to tell me about their new programs. But it really seems like this is pretty much a new program. And it's called?
So it's the Fannie Mae Home Ready program. And yeah, I mean, they've had something like it for the past few years, but this specific program came out beginning of 2016.
And I gotta ask, what is it?
Yeah, sure. Great question.
I had some hard for these questions.
Yeah. So it's really targeted towards the first-time home buyer, but not limited to a first-time home buyer. Some benefits are that it's a lower down payment. So when you have that lower down payment, you're gonna have mortgage insurance, and the mortgage insurance is also lower. You don't have to have a low down payment, but that's just kind of the benefit to it. It's really made for low to moderate income families, and it is for minority areas and designated disaster areas.
Okay, and low down payment means what?
So as low as 3% actually. And so that's really beneficial for those first time home buyers who haven't really been saving, especially in this market, where they want to really get their foot in the door into home ownership without having to continue saving.
Okay, so it's actually pretty competitive with FHA as far as down payment.
Right.
What about competition with FHA relative to qualifying ratios?
So same qualifying ratios, we can go up to a 50 debt to income, and more beneficial than FHA, I would say, because it doesn't have that life of the loan mortgage insurance, and it doesn't have that high upfront mortgage insurance premium.
Okay.
So huge benefit there, and rates are comparable too.
Right. Any other financial benefits of the program?
Well, the mortgage insurance, is about half of what FHA is, so that's huge. And then again, I think the mortgage insurance is really the big one there. It's huge savings. Compared to FHA, on like an average loan amount of, let's say, $380, you're looking at like a $75 a month.
Okay.
Savings.
So much savings on mortgage insurance.
Yep.
On this one, is there a particular level that if you have a certain loan to value, you get to remove the mortgage insurance, or do you have to refinance in order to get the mortgage insurance?
Mortgage insurance will drop off at the 78% loan to value, or you can request it off at the 20% loan to value.
And how does a buyer do that, or an owner at that time? Do they have to order an appraisal or contact the lender, or how does that work?
It's going to be specific to the investor for sure. That would be your first step, is just call your loan servicer and ask them exactly what steps you need to take to have that mortgage insurance removed.
Okay, and how long has this program been around?
Just about 6 months now, really, this specific program.
Okay, and it's Boulder, City of Boulder especially, is a very high price area.
Yeah.
Does this match up with the Fannie Mae maximum loans? So it's the same loan amount, so they're not lowered or anything?
Nope, same loan amount. Boulder County is a little tricky for income qualifying, just because, or City of Boulder. Yeah, sorry. Just because, higher income here, and so some people will be over the minimum income or maximum income requirement. But I've had clients buy in like outside Boulder, so the mountain areas, Longmont, sort of the outlying areas. It's really helpful. Okay.
So the key things is the lower mortgage insurance, competitive product with FHA. Any other key points that they is it first-time buyers only, or did I miss that?
No, not limited to first-time home buyers, but I just think a really perfect program for a first-time home buyer.
Okay.
So yeah, if someone's looking to buy another place and maybe don't have a super solid down payment saved up, this could still be a great program for them. I do have clients too that have had lower credit scores, and so I've taken advantage of the better interest rate on this program. The only thing you have to do is take a homebuyer education course, and that's like $75, and you actually come away learning something.
And how long is that course? Is it like a 1-3 hour thing or something?
Yeah, I think it takes just like an evening.
One evening?
Yeah.
Okay.
Yeah. And it's not, doesn't bother, it's, from what I've heard, because I actually haven't taken the course, but most clients come away from it telling me something.
Oh, that's good.
So, yeah.
Okay. Any other things you want to add about the program?
Yeah, so non-occupying co-signers are allowed, which is something different. There's the Colorado Housing and Finance Authority, CHAFA, has some low down payment options too, but they don't allow for non-occupying co-signers, which can be really beneficial, especially in this area, you know, where kids coming out of college need their parents to be co-signers on a loan to help them qualify for the mortgage. We can do that with this program.
Okay, well that brings up a good point. Didn't interrupt
no,
you
you're
there.
good.
For like a kiddie condo
Yeah.
for college,
Yeah.
do the students need to be working, or can they depend on the parents' income to get the loan?
They can qualify on the parents' income to
Really?
get the loan.
And they could still be on the deed, on the loan,
Yeah.
the student could.
Yeah.
So that's really pretty cool.
Yeah, it is great.
And if the parent, is there any maximum income that the parents can make?
That's going to be the
might throw
thing,
them out?
though, is the maximum, is the income requirements for sure, which is specific to the census tract, so I would have to look it up to say
Okay.
for sure. But
Okay,
yeah.
well that'd be interesting, especially in our market where we have a lot of parents wanting to buy
Right.
college condos. And speaking of that, how about approvals of condo projects? Is that an issue, or like an owner occupancy
Sure.
level in a condo
Sure.
complex?
So anything on this program is going to be a primary residence. And
Okay.
so if the buyer is purchasing as a primary residence, occupancy does not apply to us. We waive that requirement completely. Yep.
Perfect. Okay.
And then let me see, I did have one other thing. Oh, border income. We can use border income to qualify. So if you're in college and you've been renting a house with a couple other roommates and you decide that you want to buy a house but your income doesn't quite allow
Okay.
for that, we can use the border income to add and then help you qualify. So from the income from your two roommates, they're going to help you.
Okay, does
Afford the
that
house.
possibly, like if the parents are borderline on the maximum, then you have border income and put you over the top? Could that?
We don't have to include border income. It's just
gotcha.
an option. And
Cool.
then also we can use income from an accessory dwelling unit. Like there's been some places that have like a separate
Basement
basement. Yep. So
Right.
we can use that too, which
Perfect.
is kind of cool.
That is kind of a unique feature, because
Yeah.
most of the time you can't count border
Right.
income on the typical loan.
Right.
Okay. Anything else?
I think that pretty much does it for me.
Okay, thank you, Jessica.
Yeah.
And why don't you tell everybody how to get a hold of you in case you want to find out more about this program and if it works for them.
Sure. Jessica Shanahan. I'm at Premier Lending, 720-833-7964.
And would you like to share your website with them? the
Oh,
company
sure.
website?
It's www.premierlens.com.
Jessica, thanks for being here.
Thanks,
Appreciate
Dwayne.
it. Dwayne Duggan, Remax Boulder Podcast, signing off.